Hello and welcome back to another episode of the For the Property Investor podcast. And of course, we're here with Nick Bendel for the weekly news. Welcome, Nick.
Welcome, Owen. So great to see you. And I believe this is a special episode, isn't it?
Yes, it is. It is technically our last episode of the year.
And have we got a special format that we're using?
Well, a bit of a special format, I guess you could say that. We're going to have a bit of a wrap-up of the year before we get into the weekly news, which is thankfully brought to us by yourself, of course. And looking forward to the wrap-up that you're about to go on a big adventure over the next couple of weeks. So looking forward to hearing that when you're back. Nick, tell us about, we're going to have a bit of a wrap-up of business highlights for 2024. So I'm happy for you to get us started.
Okay, well, my business is Hunter and Scribe, which is a copywriting agency that writes content for finance and property professionals. And when I think about some of the highlights for the year, one of the things we do is we write award submissions. We're really, really good at it. 7 of the clients we wrote award submissions for were named as finalists, and 2 of them went on to win awards, which was really, really nice. Another highlight, I spoke at industry events for mortgage brokers, accountants, and financial advisors. And another highlight that comes to mind, Hunter and Scribe received 42 5-star Google reviews during the year, which I was very grateful for.
Wow, congratulations. That is a big year. Well done. And how long have you been in business, Nick?
Well, I started Hunter and Scribe in July 2018 as a side hustle, and then I went full-time in January 2020 because, of course, what could have gone wrong in 2020?
Yeah, obviously it was the best decision of your life.
It was the best decision of my life. For a few months, the timing did look questionable, but I'm glad I made the leap. So I guess you could say I've been in business for 6.5 years and continue to learn and continue to try to grow the business. And it is a privilege that we get to live in a country where we can run businesses without having to pay bribes to officials or without worrying that the government is going to seize our business. As happens in some countries, we are lucky to live in a country where running a business is essentially free.
Exactly. We are after having been away for the last few weeks overseas, we truly do live in a great country, and we take it for granted a lot, and we tend to complain about a lot of things that might seem important at the time, but are really quite trivial compared to most of the people in the rest of the world.
Now, I'm going to turn the tables on you. Can you tell me how long Leafield has been in business and what Leafield's highlights of 2024 were?
Yes, well, Leafield started, Leafield, the name, started in 2016, so 8 years ago. But that was just a rebranding of a business that started in 2008. So in the middle of the GFC, which was an add-on service to an existing business that I had at the time, which was a mortgage broking business. But it was in 2016 when I went solely into just the real estate business, but primarily focusing on property management for the property investor, and wanting to build a nationwide service for the property investor with the same service, the same rates, and being able to provide a service for the property investor where they could have one point of contact for all of their properties that they own. So that's how we came about and how long we've been in business. But 2024 has been tremendous year, with lots of ups and downs, and it's usually the ups that cause the downs. So we have to take the good with the bad. And yes, this year we've probably grown by about 50% in terms of properties under management. Our team has probably doubled as a result, and our business partners, our referral partners, we now have 35 all across the country. We're now in 5 states. So this year we opened up Adelaide, being the fifth state in South Australia, and we're happy with those number of states for now. And yes, we are looking forward to a big year next year, and to consolidate on this growth and hopefully have less downs. So when you grow that rapidly as a business, you have growing pains, and it's which is unfortunate, and it's you can't really prevent them, but it's how we deal with them at the time with our clients that is the real difference. And we always hope to deal with them in a professional manner that keeps our level of respect, at least with our clients. But apart from that, we have a lot of happy clients as well, who are happy with our service. And yes, we're really looking forward to the coming 12 months.
Well, congratulations on a big year. And you mentioned Leafield is in 5 states. Is it 5 states or 5 states in one territory?
No, just 5 states. No territories as yet.
I thought you were in ACT.
No, not the ACT. It has come up a number of times, and it just hasn't come to fruition. So if someone was to come to us and said, "Hey, yep, we've got all of this business and we're good to go," so we've probably had serious conversations with 2 or 3 people who have said that they'd like to see it happen in the ACT, and we nearly bought a business that was already operating in the ACT, but yeah, hasn't come to fruition just yet.
Okay, so you've still got the ACT, Tassie, Northern Territory, and then of course, once you open up in those states and territories, you're then going to push on to Norfolk Island and Lord Howe Island.
I don't know what the size of the market is in Lord Howe Island and Norfolk Island, but yes, I don't know. It's if we manage to open up in Tasmania and Northern Territory, then yeah, I'd be pretty happy with that.
Okay, watch this space. Well, congratulations on a big year, and I hope you and Leafield have another big year in 2025. Should we recap now some of the big stories from 2024?
Yes, Nick, it's please bring us what's in the news right now, and well, what has been for the year of 2024.
Well, we're going to look at 3 stories. And the first one is property market cools throughout 2024. The national property market continued expanding throughout 2024, with November marking the 22nd consecutive month of growth. However, there's a good chance that the streak will come to an end as early as December or January. In November 2023, prices were growing at 2.1% per quarter, but in November 2024, prices were growing at only 0.5% per quarter. It's also interesting to look at how the different capital city markets have evolved over the past 12 months. 4 cities are doing better now than a year ago. So Perth was growing at 13.5% annually in November 2023 and was growing at 21% in November 2024. Adelaide went from 7.6 to 14%, Brisbane from 10.7 to 12.1, and Darwin from minus 1.5 to 0.9%. Now, two cities are kind of doing better, kind of doing worse. Hobart went from -3% to -1%, and Canberra from -0.3% to -0.1%. And the two big cities are definitely doing worse. So between November 23 and November 24, Sydney went from 10.2% annual growth to 3.3%, and Melbourne went from 3% to -2.3%. The first question I've got for you is, do you expect national property prices to increase or decrease in 2025?
I would say in the first half of 2025, we would definitely see a decrease. And in the second half, it's all dependent on what happens with interest rates.
Okay, well, hold your fire on interest rates because we might discuss them a little bit later.
Okay.
So you're thinking down in the first half of the year, prices down, and then prices up in the second half. So can you explain why you think prices are going to go down in the first half and why there'll be a rebound in the second half?
Well, not sure if there'll be a rebound in the second half, but it could continue to maybe stay flat or continue downwards. But yes, if we look at Sydney, which is the biggest market and tends to have an influence on all markets around the country, we've seen a big decrease this year, and if we were to look at those figures, which are annual figures from November to November, that you've got there, if you looked at the second half of this year, we're probably in negative territory. And we would, talking to everyone on the ground, agents on the ground, it's fairly bleak. And everything that's happening in the last 3 or 4 months hasn't really flowed through quite yet into the figures. And yes, things are looking quite bleak in Sydney. So I would expect that to continue due to the interest rate environment, cost of living environment, and just the bleakness of the current political environment as well.
Okay, so you've told us what you're expecting from Sydney next year. What are you expecting from Melbourne?
Melbourne is probably going to be fairly flat and fairly similar. And I think the longer term outlook for Melbourne is a lot more positive. And it's because it's a market that hasn't really grown at all for a number of years, like other markets around the country. And the price disparity between Sydney and Melbourne is just huge. So if there's anywhere that's going to have a big turnaround in 2025, it's going to be Melbourne. But it all comes down to picking the timing. So if you wanted to buy somewhere and that's going to be a long-term hold, it would be Melbourne as my pick at the moment, because when it goes, it's going to go and go big, because every other market has so far in the last 5 years, but Melbourne hasn't.
Interesting you should mention that, because part of the reason Perth has gone gangbusters over the past 3 years is because from 2014 to 2021, prices actually went backwards in Perth, and a lot of the growth over the past 3 years has been catch-up growth. Right now, Perth's median is only a tiny bit behind Melbourne's. Brisbane and Adelaide have overtaken Melbourne. Melbourne has gone backwards for the past 2.5 years. So I guess the longer that downturn continues, the more catch-up growth there might eventually be.
Yes, absolutely. And so it'll be watch this space with Melbourne, but it's just the timing that is hard to predict. So as they say, it's more about time in the market rather than timing the market. So if you're in a position to buy and you're looking for capital growth, in the short to medium term, I think Melbourne's definitely the pick.
Okay. Now, as we mentioned, Perth has been booming for the past 3 years or so. How do you think Perth will be placed by the end of 2025?
It's interesting. There's actually a lot of talk in the financial markets about maybe another resource boom happening. China is looking to ramp up growth, economic growth, and the way they do that is by having a huge infrastructure boom, and they need resources for that, and we have most of those resources that they want. So that's potentially going to keep Perth going, but otherwise, the figures that you've just quoted again are probably a bit more inflated than we would, and don't represent the current Perth market in the last sort of 3 to 6 months, because I would expect it's quite flat right now. And again, talking to everyone on the ground there and buyers agents especially, a lot of buyers agents have pulled out of Perth. It's been overheated. And that's actually helped the Perth market because it was out of control, and it did need to calm down a bit, which it has, and so it needs some breathing room. Now, whether it continues to just bubble along and maybe have another spurt, I think that all comes down to the demand and supply of both available properties and also the availability of money, which I'm sure we'll talk about.
I'm very curious to see how things play out next year, particularly in Melbourne and Perth. Who knows what we'll be talking about in 12 months' time. Our second story for today, Owen, is government talks tough on housing market. Two of the big themes this year were housing supply and housing affordability, with the federal government attempting to record improvements in both areas ahead of the 2025 election. The government's 5-year home building target began in July this year. By July 2029, they hope to have facilitated the building of 1.2 million new homes. And just last month, the government finally steered its shared equity scheme, Help to Buy, through Parliament, which is designed to make it easier for lower income and middle income people to enter the market. Under Help to Buy, buyers will need only a 2% deposit and won't have to pay LMI, so they'll be able to enter the market sooner. Also, buyers won't have to commit as much money to buying the property because the government will take an equity stake of up to 30% in existing homes and up to 40% in new homes. Income limits will apply for Help to Buy. The maximum income for participants will be $90,000 for singles and a combined $120,000 for couples. Owen, I'm keen as always to get your thoughts. The government wants to facilitate the building of 1.2 million new homes in the next 5 years, but the latest data shows that in the 5 years to June 2024, only 895,000 new homes were built. Will the government be able to achieve its target?
What, by 5xing what's been done over the last 5 years? Yeah, no, absolutely not. Won't get anywhere close to it. And we're going to have to live with this drama for the next five years or even longer. It's simple answer.
Okay, well, looking at those numbers, when we compare the most recent 5-year period of about 900,000 new homes, trying to get that up to 1.2 million new homes means there would need to be a 33% increase, which is a massive increase, and supports your argument that it's just not going to happen.
Yeah, in terms of a lot of things need to happen to be able to do that, and it's we need the availability, need it easier to be able to construct. We need it cheaper to be able to construct. From a materials as well as labor point of view, neither of those things are going to happen. We need the availability of land to be able to build houses as well. Talking to developers and builders, who are building unit blocks and apartment buildings. The costs in the last 5 years has just skyrocketed. So if I know everyone wants prices to come down, but if prices do come down, then it will be unaffordable for builders and developers to actually risk trying to develop new construction buildings because they won't be able to get their money back. So and that's the biggest risk.
Yeah, that's very interesting. So as you're saying, costs have gone up for builders, which means potentially profit margins have gone down. And if the final sale price also goes down, then their profit margins further erode, which then reduces the incentive and indeed the ability for them to build new homes.
Yes. So if they don't think that they'll even get their money back, then they won't even attempt to risk starting to build. So it's a lot of things need to change and happen. Yes, we need more housing, but it needs to be built in a way that is affordable.
Well, we also touched on Help to Buy. Do you think Help to Buy will make an impact on housing affordability?
For a few people, but not the broader market. No, it'll help a few people. And it'll be warm and fuzzy for them and the people that they know, because yes, the government helped them get into a house of their own, but like a lot of these government schemes, it'll probably be short-lived. It's to help the people who would never have been able to get into a property anytime soon, and that's what it's designed for, which is nice. And take advantage of it. Absolutely. There's nothing wrong with it, but it is going to create a little bit more demand in the marketplace. If people have a bigger deposit with their 2% than someone else, then and they're getting help from the government, then if that means that they can offer a bit more on a property to be able to secure it, then that's going to push up prices. And it's but again, it's only for a limited number of people, and it's not going to make a huge difference.
So it's interesting. You're saying you're predicting rather that the government won't hit its 5-year housing target, and you're predicting that Help to Buy won't really improve housing affordability. So let's assume, for the sake of the argument, that you're right with both of those predictions, and therefore let's assume that these two key government policies are going to fail. How do you think the electorate is going to assess the government's housing policies at next year's election? Do you think they will look at these policies and say, well, it turns out they were a failure? Or do you think they'll like the vibes that are coming out? The government appears to be doing something, they appear to be helping, and therefore will they give the government positive marks?
Not at all. I'd be surprised if the current federal government survives the federal election. I think it's May at the latest. I think it's due. It's I think the electorate is sick of this government talking about band-aid solutions, getting distracted by other unimportant issues, and while they're all trying to put food on the table, they're trying to pay their rent or their mortgage, and the government's going off and putting through legislation that's totally unrelated, or are just small band-aid solutions to say, hey, we're good guys trying to make people feel good. So instead of getting in and making real change and real effort.
Interestingly, housing affordability now has been really a hot button issue for 18 months, I'd say, and it looks like it's going to continue to be a very prominent issue next year, and I suppose during the election campaign as well. Over the last week or so, Claire O'Neil, the housing minister, gave a radio interview in which she said that Labor did not want property prices to go down. But on the other hand, Labor apparently is for improved affordability. And presumably you can only get improved affordability if prices do go down. So it seems like they're sending mixed messages.
Well, yes, because maybe someone's told them the true reality of the situation, that if they want to build more houses, as I explained before, if to build more houses, build more apartment buildings and unit blocks, to be able to do that, you need to be able to sell them to at least cover costs. And at the moment, it's not looking pretty for a lot of developers and builders to be able to do that in the current market. And if prices do go backwards, then that's going to make the problem even worse. And that's not even talking about, government red tape to even get these things approved and started in the ground. So yes, we don't want to see unsustainable growth, but we do still need to have growth in the property market to be able to catch up with the increasing costs, so that when new builds are built, they can be done to at least cover costs, and maybe even make a profit for these builders and developers, so that they can reinvest those profits back into their next development, and in the meantime pay some taxes on that income, which is not a bad thing.
Well, let's move from housing affordability and housing supply to our final story around interest rates. Interest rate outlook remains unclear heading into the new year. Another big theme in 2024 was the outlook for inflation and, by extension, interest rates. Between the September quarters of 2023 and 2024, inflation fell from 5.4% to 2.8%, finally putting it back within the Reserve Bank's target range of 2 to 3%. However, contrary to expectations, the RBA did not cut rates in 2024, even though many commentators were expecting a rate cut to occur. Now there's a widespread view that cuts will occur in the first half of next year, with CBA expecting the first cut to occur in February and the other big banks expecting it to happen in May. However, the RBA has said repeatedly that it is, quote, resolute in its determination to return inflation to target and will do what is necessary to achieve that outcome. Also, the RBA has forecast that inflation will begin rising in the second half of 2025 and will end the year at 3.7%, which again would put it above the target range. So it is possible interest rates actually won't fall during 2025. Owen, the RBA kept the cash rate at 4.35% throughout the year, despite coming under pressure at various times to increase the cash rate and then to reduce the cash rate. Do you think the RBA did the right thing in leaving rates on hold throughout 2024?
Absolutely. It's I was wrong in expecting to see a rate cut before the end of this year, and it's proven so by the RBA comments and how inflation has behaved. And even though it's back down to where we would like to see it, it's still not there in. It hasn't taken a natural course to necessarily get there, and so we need to see that sustained lower inflation for longer, and it seems to be stubborn. There's a lot of areas within the economy that have still got high inflation, so we need to see them get under control. That's what the RBA is talking about, and so it needs to be sustained. And yes, the RBA is probably looking at the rest of the world now, where they have started cutting rates and inflation is already starting to react to come back up. So while that's happening in the rest of the world, they're probably saying we're happy to sit here and leave rates where they are, and let's see if we can have some long-term sustained lower inflation, and let's prove that it stays lower. Yes, it's absolutely necessary to be able to get control of this economy longer term, and yeah, if the rest of the world is trying to stimulate the economy, it's to be able to keep our economy stable. We need to be able to at least do our bit to maintain our inflation. So yeah, there's a possibility. I think we spoke about not long ago as well that yeah, rates could not even drop this year at all.
Next year, I think.
Next year. Yeah, this coming year. Yeah.
Okay, well, let me put a counter view towards you. So you've explained why the RBA was right not to reduce rates. The economy, though, slowed throughout 2024, and the latest GDP figures confirm that on a per capita basis, the economy actually declined 1.5% in the year to September. From memory, Owen, I think on a per capita basis, the economy has gone backwards in 7 of the last 8 quarters. We are in a per capita recession. With that in mind, should the RBA actually cut interest rates to stimulate the economy?
No, because the fact that we've had a rapid growth in population has kept the economy buoyant. So so that just means that we haven't paid the piper, as I think the saying goes. It's we've artificially inflated the economy by just pumping more demand into it overall. And which has kept the official growth rates in the positive, which is maybe a tactic of the federal government to be able to officially keep us out of a recession. And but if we pulled the Band-Aid off properly and let happen what needed to happen 6, 9, 12 months ago, and to be able to bring inflation down rapidly, which might have meant that, yes, we did officially go into recession, then we would probably be in a much better situation right now.
So it seems like at some point we're going to need to swallow our medicine. I guess we have been swallowing our medicine in the form of higher rates for the past 2.5 years, but it sounds like we're going to have to swallow even more medicine in the future.
Yes, but like everything that this federal government seems to do, they're treating us all like 5-year-olds and trying to just gently pull the Band-Aid off slowly and surely, and without making us cry. So yes, Mr. Federal Government, stop treating us like 5-year-olds and rip that Band-Aid.
Rip it off. Okay, I like it. If we've been talking about rates, and we've made the point that the RBA was probably right to keep them high longer. We've mentioned that rates may not fall next year, but the big banks are expecting rates to fall within the next 6 months. The bond market is expecting it. If and when rates do fall, what impact would that have on the property market?
Yeah, it will have a upward effect on the property market in terms of yeah, money will be cheaper, which means more people can borrow money to be able to buy, and more people will be able to borrow more money to be able to buy more expensive properties. So it's so that will have an upward effect on prices, most definitely. So now that could not necessarily be a bad thing based on what we were talking about earlier, with prices needing to continue to grow so that we can afford to continue increasing supply. So we definitely do not want to see sustained double-digit growth because that's unsustainable and not healthy. But we still need to see sustained growth, so that it at least keeps up with inflation. But when we look at the inflation of the cost of building, it's higher than the official inflation rate, CPI figures. So that's where we're talking about sort of 6, 7, 8% growth in property prices to be able to stay up with the inflationary cost of building more property.
Interesting. We spent the year talking about housing supply, housing affordability, property prices, interest rates. I have a feeling we're going to be talking about those things again next year. I've really enjoyed this year, Owen. It's so nice from my perspective to chat with you because I learn a lot. I get the benefit from your considerable industry experience, both as a broker and a property manager. So thank you very much for that.
Thank you, Nick. That's much appreciated and very kind words. And yes, this has been very enjoyable for me as well. And it's by talking about these things and needing to learn more about these things, it helps me be a better person to help educate and inform people about what's happening out there in the property market. So looking forward to talking about all of our favorite things in 2025.
And we have spoken before about how Jim Chalmers, Anthony Albanese, Michelle Bullock are all keen subscribers. They listen to every episode. I mean, we don't, no one's told us that officially, but I think it's very safe to conclude that they are listeners. So
it's obvious, Nick, of course.
So I think we'll say goodbye to Anthony, Jim, and Michelle. Wish them happy holidays, and we will see them and all our other listeners and viewers next year.
Okay. Thank you for your kind words, Nick, again. And yes, hope you enjoy your holiday period as well.